we're going to go on for just over 5 minutes because we have loads and loads of questions, and I want to get through a few of the audience questions, and kind of continuing on from that education piece around joining the dots. Question for Joe from Omar Baxa: how are we interfacing with rating agencies in our joint exploration of sustainable trade finance, as delivering products and solutions is only as valid as the risk investors will choose to take?
Very good question indeed, and I think this is an interesting aspect, because of course, on the one hand you have the classical, or let's say the big three rating agencies, which are of course increasingly looking at the space, because there is a credit imperative today as well, right? And again, this comes down to, particularly in certain industries where you know that existing business models today won't really be what the consumer is looking for in the next 10 to 20 years. So that brings us back to the fact that as you are looking as a rating agency to assess a company's risk and assign a credit rating, and I'm talking about the company globally, right? Not in relation to specific trade finance business or to a specific capital markets business or whatever, but just to a credit rating, you certainly need to look into the longevity of the business, right? And again, we discussed it before, it is a business imperative now to really be on a positive ESG track, because otherwise, ultimately, particularly your consumers, but also your shareholders and employees will leave you behind. And then, of course, there is new companies sort of like entering the industry and really looking at signing sustainability scores. Probably the most well-known one to mention here, without wanting to advertise or promo anyone, but it's Sustainalytics, which is a Morningstar research company, and who are really striving to set out to create these sustainability ratings. I think it brings us back to the same old, what we discussed previously. It's really important in this context to get relevant data, because this is not just a balance sheet analysis that you sit down with and you go through. I mean, for some sectors, certainly there can be a balance sheet analysis by which, for example, for an oil trader or so, you might be saying, well, you're saying you have reserves based for the next 100 years. How much of that are you actually going to use? But I think overall, a classical balance sheet analysis alone will not get you there to really create a rating. So what is important is to, again, collect that relevant data, and over time, also by looking at supply chains and supply chains of supply chains, come up with new ways of ratings, for sure. So yeah, there's a huge learning process here. So a great question from Omar, definitely.
Thank you very much. I mean, I'm surprised we haven't mentioned fintech or blockchain, which is unusual for anything coming from me. So I'm going to ask it. A question from Bhavna Saraf again, and perhaps Katharina, can I ask you to answer this? Could we not use fintech, who may have already created parameters for some of these purposes?
Yes, of course. And as I wrote in the chat, banks are actually already using it. Yeah, but the point is, they are usually very specific on a certain industry or on a certain product, etc. For example, and here, the working capital industry, the working capital financing part is actually in the lead. You know, we do have a couple of ESG working capital programs already live, not with UniCredit as sole, but in the industry. And here you see that the use is always based on external rating labels, which differentiate from the underlying industry. And then, of course, KPIs, those rating agencies and those surveyors have created, and which then are implemented in the system or in the infrastructure which has been provided by the fintech. It's nothing else. The point is, we use it already in working capital, so you need to translate it from the regulatory perspective in the bank's own taxonomy. And of course, it would be very good if out of this, an industry standard is going to emerge. However, we need to see how this can be used as well for trade finance. I'm pretty sure it can. It depends, just to make the reference what has been said before. It depends on which minimum set of data the industry agrees together with the regulator what we need to tick if we define a trade as a sustainable trade finance. And there it comes down. Once we have the KPIs, we can put them together with fintechs and any infrastructure and use it. But that's, by the way, the same if you look on the green loan or green bond principles. They are, and I saw a question in the chat already, they are ESG guarantees in the market. And those guarantees work by ESG-linked KPIs. And these KPIs are set by external technical experts. And then they are followed. And for that, you also can use fintechs systematically in any underlying system. Though there is definitely room for those fintechs. However, as always, at the end of the day, we need to see whether this is blockchain, which, by the way, has a very high energy consumption. So I have question marks if this is green in the future, but that's a different topic, not for today. But however, fintechs itself, they will play a substantial role in all that journey. Absolutely.
I think, yeah, Dipesh, if I can add to what Katharina said, I think there is almost way to look at it in two parts, right? So one is the whole assessment, embedding ESG risk assessment into what lending institutions are doing. So i.e. translating ESG risks into P&L risks and be able to evidence it and basis which make decision of lending or not lending, which could also be used later for regulatory purposes. And the second part is this monitoring and end use monitoring, where we could obviously use any infrastructure, be it fintech, outside world. So I think there is some work which has happened on the former, but one or two case studies that have got published. But really the collaboration with rating agencies and others would play a big role in translating the ESG risks, considering the futuristic scenarios into P&L risks. So future P&Ls, balance sheet, that is the kind of work that we are looking to do. In fact, this is the kind of thinking that's developing in the white paper that we are developing at ICC Working Group on Capital Treatment for Sustainable Trade Finance, where we are actually looking at developing some use cases for translating trade finance risks into P&L risks and be able to analyze companies differently in future. So very happy. I see a lot of questions. I don't know if you can answer all.
I'm going to.
But I thought it's useful to state that, and if anybody has any question or input on this, we are happy to collaborate again. I mean,
yeah. And there is definitely just to maybe to add to that, there is definitely a lot going on in this space. And you know what? I think, Deepesh, you can already tell we could have a separate trade cast just on that topic alone. Because there is certainly a lot of exciting initiatives ongoing in that space. Technology is key.
Absolutely, and I'm afraid in the interest of everyone's extremely busy schedules and timings, but I'm going to ask one last question to everyone and ask you guys to keep it short. We have taken a copy of all of these questions, and the panelists and I will convene afterwards and try and answer a few of them and publish them alongside with the recording. We've had so many requests for the recording, which we will be extensively publishing to everyone for everyone to view. But what is your future looking view? What's your short-term, medium-term, long-term looking view when it comes to sustainable trade finance, and what kind of needs to be done? Who would like to answer this one first? Joe, over to you.
I love that. I'd say if I can just say one thing, let me just pick what I think is still the most relevant. It's about education between clients, lenders, etc. Education, and also education of consumers, and therefore collaboration. I think that is absolutely key, because again, we see it's such a broad topic. There's so much out there. But really, it comes down to making sure we are all singing from the same hymn sheet. But I'm not saying we need to have one definition, definitely not. And I'm not a very structured person when it comes to things like this. But this is certainly what I sort of like set as my target for this year with ITFA. And I'm really grateful, Deepesh, that we are doing this thing today, for example, because it massively helps in that aspect, is really to work on the education piece, to just make sure that people understand the complexity of the topic.
Swaroop?
Yeah, I think if I were to pick out collaboration is certainly one. I think this is an area where there is so much collective wisdom between different parties, and no one party can do everything. I mean, this is an area which is multi-dimensional in many ways. So therefore, there is heavy need for collaboration and intervention by, multilateral and intergovernmental institutions to be able to come up with these standards at the end state. So, all these players collaborate with each other, and then you have a common neutral body sort of coming up with future standards, etc. in end state is what I see. The other key piece, I think, is the whole change that all of us have to make personally as well as professionally of the way we look at our business and work. And I think fundamental shift is going to happen in the value chains around the world, and therefore the risk assessment of these value chains will also change fundamentally, and not so all the historical models may not necessarily work for future. So I think these are two fundamental shifts that I see: collaboration and futuristic risk modeling instead of historical risk modeling.
Thanks very much, Swaroop. And Maria.
Well, I agree with what everybody's said, but one group that I think really needs a lot of assistance are SMEs, and helping SMEs get access to the finance to help them grow and become sustainable companies, and be able to market their goods and trade. I think that's really important. So I think collaboration with the standards industry, because that's, that drives change. And the governments and the international financial institutions. I think it's really important moving forward.
Katharina.
Yes, thanks. I agree with all of what has been said. Education, and I will include advisory, collaboration, and of course also keeping in mind the broad SME segment. But I think for me, it comes down to one material question. You need to decide whether you are part of the game or you are out. You need to decide in the future if you want to lead the folks or if you are the follower. Because that's the question. Are you continuing to preserve your existing business model and to protect the existing revenue pool? Or are you ready to open up to invest? And I mean investment not only in terms of capacity, brain, etc., also in terms of investing of capital, investing of capacities and knowledge, and taking potentially an additional risk and an additional hit in your P&L. But that is an investment for the future, and it does not only applies to banks or to trade finance. It also applies to everybody. It applies to countries. It applies to corporates. And that is something, and it even applies to consumers. So therefore, I think we are now at a point where everybody needs to take a decision. And then to follow that decision, because if we all agree that there is something to do and there is an opportunity, then automatically collaboration will follow. And of course, the knowledge is going to be shared, and you need to accompany your clients across that journey. Otherwise, it won't work. Thanks, Deepesh.
Thank you very much, Katharina. So to our great panelists and actually audience, I'll leave you with this final question, echoing the words of Katharina. Are you on the sustainable trade finance train? Because it's on the platform, but it's leaving shortly. Swaroop, Anne-Maria, Joe Wissing, Katharina, thank you very much for being excellent panelists on this truly incredible Tradecast. We will be emailing all of you the recordings of the Tradecast, and to our excellent audience, thank you for taking part in and participating in this very active, lively and important session. We'll see you soon. Bye for now.